Hello, I'm Diego. Today I'm here in Paris with Patrick Leniston from Gleeds. Patrick, thanks for joining us.
Thank you, Diego. Nice being here.
Nice. It's a pleasure. Can you tell us a little bit about Gleeds, please?
Yeah, Gleeds has been around for a long time. It's British in origin. We're celebrating 150 years this year, which is spot on when the GRI is having its September event, so good timing. And our main trade is the consultancy, but looking after projects and as an extension to our clients.
Great. I know that you are very active right now in the hotel sector. Can you tell us if it's a resilient bet, is still a resilient bet, or it's time to rethink the asset strategy?
We've been active in hospitality for the last 20 years, so it's from that point of view, it's a resilient asset. So we've seen the different cycles which come through. Obviously, post-COVID and with the demise of the office space, we've seen a lot more interest in hospitality, but I don't think the fundamentals have changed. Possibly there's a bit of a bubble going at the moment, but not massive. And I think the interest will still be there because the fundamentals are good. Europe will still stay a destination, Paris very much so. Wider France is still a lot to do. So I think it's a resilient asset. It is quite different to others because it's a very operational asset. So you need to get stuck into the operations, understand it, have people within your team which understand it to make the most out of it.
Okay. And when we talk about hotel investments, how is France positioned among the other European countries?
I think it's still attracting a lot of investment. I mean, there's a bit of a trophy, especially when you're looking at Paris, there's a bit of a trophy asset mentality. You need to have your asset, your brand present in Paris.
Mhm.
And I think there's still a bit of that going on. But yeah, no, I mean, we're seeing record 2024 was a record year in terms of returns. Is that the peak? I don't know, but there's still a lot of demand and there's still a scarcity of rooms availability. That said, I think Southern Europe is probably accelerating in terms of investment. The market fundamentals are stronger. The economic cycle is better than what we're seeing in more mature markets like France or Germany. The fundamentals are good. I think there's probably more attractive markets than France at the moment. But there's very much a demand and request, and we're working on quite a few large sort of repositioning from office to hospitality, which are heavy capex projects. So the returns have to be there for that to happen.
Interesting. And when we talk about investment or investors' expectation, which products are best suited for the current investors?
I think we're still doing a lot of. I mean, Gleeds is recognized for a lot of high-end hospitality, and we're still doing a lot of luxury palace, which is the very French denomination for 5-star plus. We are seeing some 5-star sort of lifestyle brands. So the high end, which are coming into the market, so slightly smaller, but with a very sort of boutique-y type offer. So I think it depends, but I think investors who are you're not seeing straight leases anymore. You're seeing people getting involved in the management, and so not all investors have that appetite to do that.
For sure. And you mentioned about the asset repurpose, right? Some renovation going on. How do you see this? Is something that is happening in France or across Europe?
I think it's definitely happening in very land and urban constrained areas like Paris.
Okay.
New build is something which is difficult. A lot of the new build in the Paris region was building over railway tracks and sort of reclaimed land and so on. But that also, with the current context, is becoming difficult to finance because it's very heavy in terms of construction costs. You're seeing a lot more new build in maybe slightly less mature markets or urban areas which haven't spread quite so much. Once again, Southern Europe. I mean, Southern Europe is probably where our teams are the busiest at the moment.
Okay. And looking beyond the hotel's assets, what other assets, expertise are you bringing to projects in France?
Definitely, and nothing to do with COVID, but we've seen it since COVID is sort of mission critical data centers. That has and continues to be probably the fastest growing sector. Difficult to judge, I would say, yet in terms of volumes with AI and the impact that's going to have. Because on the one hand, you've got technology which has improved for data storage, so you need less space to store the same amount of data. But the AI element it does require a lot more computing power. So therefore the volume will increase. How is that monetized in the business model? It's to be seen. But yeah, no, the data centers is probably the one which has sort of increased to becoming, at least in Western Europe, one of our biggest market shares in terms of what we do.
And it's good that you are active across Europe, and maybe you can bring some outputs from different locations, right?
So, I mean, historically, you had London, Amsterdam, Frankfurt, and Paris. Amsterdam has pretty much stopped in terms of new build because of the energy issues they have over there. London, we're still seeing activities outside of London, but the repurposing the previous generation of data centers. Paris has still got a lot going on now, a lot of new builds. Germany, I think, is booming a bit more regionally than just Frankfurt. Berlin is probably upcoming. Central and Eastern Europe hasn't had much benefit from that. I think the Ukraine war has put a stop to a lot of that, but it will be coming because the requirements are there, and you need to be close to where the data users are. So we're hoping, but I mean, it's fundamentally the market's there to happen. Spain, Zaragoza region is booming from a data center point of view. Milan also we're seeing a lot of interest and investment there.
Interesting. Zooming out a bit, besides France, which other location, country is catching your attention right now?
Yeah, well, I've said it a few times now, but I'd say Spain still continues to be probably the number one destination for investors. The fundamentals are sound. The deals are not too complex. The political dynamics are probably more positive, or seem to be more positive than other countries. Time to market is shorter. So yeah, Spain is quite dynamic. Italy's come back strong this year. Multiple asset classes, probably more northern Italy than southern Italy outside of hospitality. I'd say they're the first two, but Portugal has come down a little bit. It was very active for a while, but it's still a relatively small market. So I think there's a lack of, there's a lot of appetite to go into Portugal. There's not many assets available, and a lot of them have been changed hands recently. So there's not that much on the market now. Yeah, I would say those Southern Europe is definitely where most things are happening. Germany's quite a complex market. That said, we still see dynamic pockets like Berlin. There's still a lot happening there, and the regional strength of Germany. But there's a lot of investment which needs to go into Germany. And we talk a lot about defense these days, but Germany's also got a big infrastructure investment plan which needs to happen.
Okay, thank you very much. You are a long-term member of GI. What you like the most about our community?
It's just that it's a community. You get to know people. You can get to talk about different aspects, not just work, but sort of the constraints we all have in our daily lives, making the balance between work and life work. Now, it's interesting to see the change of dynamics, and sometimes in some of the conversations where you're in a sort of a club meeting on a subject you're not so familiar with, you do feel a little bit like a fly on the wall, just listening in and understanding what the dynamics are, which from a consultant's point of view is brilliant.
Amazing. Patrick, thank you very much. It's a pleasure to have you with us.
Thank you very much.
Thank you.